Shiba Inu has been in a downtrend for 4 years, and right now it's sitting on the exact same support zone that triggered the most explosive rallies in its entire history. Is this the setup that starts the next cycle? Or is this the final drop before it goes somewhere nobody wants to talk about? Let's look at the chart, honestly. This video is for educational and entertainment purposes only. Nothing here is financial advice. Always do your own research before investing. Let me start by zooming out because SHIB is one of those assets where the daily chart noise can completely distort what's actually happening at the macro level. Since the 2021 peak, SHIB has been in a multi-year downtrend. That's not controversial. It's just what the chart shows. Lower high, lower lows, extended periods of sideways bleed, and occasional violent relief rallies that ultimately failed to change the structure. But here's what's changed recently and why this chart is worth paying attention to right now. SHIB has returned to a major historical support zone. This isn't a support level invented by a drawing tool. This is a zone that has been tested multiple times over approximately 4 years, and every single time price has reached this area, aggressive buyers have shown up. That's not coincidence, that's market memory. Now let's talk about what's happening inside this support zone, because the details matter. First, selling momentum is weakening. The most recent down leg has shown less velocity than prior drops. When a downtrend continues but each successive move loses force, that's a classic sign that sellers are running out of fresh supply to push price lower. It doesn't guarantee a reversal, but it's a prerequisite for one. Second, the distance of each new low is shrinking. SHIB is still making lower lows. I'm not going to pretend otherwise. But the magnitude of each new low is contracting. In technical analysis, this kind of pattern, where price grinds lower but each push gets smaller, often precedes a base formation. The market is compressing before a decision. Third, this is what long-term analysts call a decision zone, not a confirmed bottom, not a guaranteed launch pad. A decision zone, meaning the next significant move in either direction is likely to originate from here. The people who've been watching this chart for years are watching this area right now. Let's walk through the bullish scenario first, because technically it's the more interesting one. If this support zone holds in the end and buyers defend it the way they have in the past, the initial recovery targets are 70 to 80. That's the first meaningful resistance zone above current price and the minimum expectation for a relief move. Beyond that, the second target range is 100 to 120, which would represent a significant move from current levels and would likely coincide with broader crypto market strength. In a strong bull scenario, meaning Bitcoin enters a new upcycle and risk appetite returns across the board, SHIB and assets like it tend to overshoot dramatically. In that environment, 150 and above becomes a realistic discussion. High beta altcoins don't just move with Bitcoin in bull markets, they amplify it. The core logic of this scenario: the current zone becomes a long-term accumulation base, a multi-year floor from which the next cycle launches. Now let's be completely honest about the alternative, because ignoring it would be irresponsible. If the current support zone breaks on a monthly closing basis, the picture deteriorates significantly and quickly. Here's why a support break at this level is particularly dangerous for SHIB specifically. Below this zone, there is historically thin price structure. In other words, there are very few prior levels where buyers established meaningful positions. When price enters an area with no historical memory, no prior support, no prior consolidation, the market tends to fall until it finds something to grab onto. Those moves can be sharp and they can be fast. A break here would technically signal that the bear market that started in 2021 is not yet complete, that the final washout hasn't happened yet. And in that scenario, discussing specific lower targets becomes speculative because the chart simply doesn't have clear reference points below. This is the scenario that nobody in the Shiba community wants to talk about, but any honest analysis has to include it. Based purely on what the chart is showing right now, I'd put this at roughly 60% bounce, 40% final drop. Here's why that split makes sense. The 60% case for a bounce rests on three things. Price is at multi-year support. Real, tested, historical support. The risk-reward ratio has started to shift in buyers' favor at this level, and selling pressure is measurably weaker than it was in prior down legs. Those three factors together are meaningful. The 40% case for further downside exists because downtrends can persist longer than any technical level suggests they should. The broader macro environment for altcoins remains uncertain, and SHIB has disappointed bulls at these levels before, not broken the support, but failed to produce the explosive move that justified the risk. The key variable that tips the balance: monthly candle closes. If SHIB closes multiple months below this support zone, the probability flips immediately and the bear scenario takes over. Monthly closes are the signal to watch, not hourly candles, not daily wicks. Monthly closes. Here's where we land. SHIB is at a critical threshold. The next few weeks will tell us whether this zone represents the beginning of a new bull cycle or the final warning before a deeper drop. No chart can tell you with certainty which one it is. But what the chart can tell you is that this is one of the most technically significant areas SHIB has traded in for years. And that makes it worth watching closely. If this kind of analysis is what you're looking for, subscribe and hit the bell. Like the video if it helped you think through this setup clearly, and tell me in the comments, bounce or final drop? Where do you stand? See you in the next one.